if I will continue to push up. Look at that, the 1 over resistance. Still at this H1 support area. Yeah, you have two positions. This one actually close it. Actually close a position here. I still have that 1 year run from down here. So I've been talking about this area all week on the daily time frame. You know, this entire zone is a rejection area. This entire area right here, so it's a rejection area. This is the red zone. All right, and the reason being is that the daily candles came into this area on multiple occasions, and what happened? We rejected this area. You know, so I think if price can break above here, then even going into next week we might get some further upside. But for now, just gonna stop the entries on this trade. So stop is at entry for this trade right now. The first entry was here. I closed this at about 6 pip. Alright, seeing that it went up 6 pip and you know, I just closed it because I have a position running from down here. You know, this signal was also sent in the premium group, so they should have closed 50% when this pulled back to entry. So anybody took this trade, they should have actually closed 50% on the pullback here. Our take profit one is at 149,852 right here. Euro USD, I was looking at this potential break and retest. You know, this happened at 2:30 this morning, but I was sleeping. You could have had like a 12 pip stop, and you would have gotten 26 pips. So this would have been an okay move. This was a play that we discussed yesterday on the stream as well. You know, for price to actually break this trend line and retest it. So you could have gotten sales here and just ride the trend down. You would have made 34 pips. So for the person who were actually watching, you know, you could have capitalized on that. And this was the same idea as well. This was the trend. We broke the trend, pull back, retest the area we broke, you sell from here. And if you had sold here, your drawdown would have been about 2.7 pips, and you would have gotten 25 pips overall. Gold last night I sent this idea in the premium group with, you know, roughly a 20 pip stop. Would have gotten like a 8 pip drawdown, and you would have made overall 33 pips. and then you would have moved stop to break even, but then you would have got stopped out at entry, but you still would have been able to secure some profit on this trade. You know what I don't like with this? This is a new H4 candle. And if we have difficulty breaking this high, you know, it might push down because we also have this area as well where we can actually retest. We can retest this area as well, but at the same time, I am looking at this as a rejection candle because we are in the rejection zone. Price came down and it was unable to maintain its momentum and we pull all the way back into the zone. And what you notice with the daily candle, you might see a few with no top wick or bottom wick, but for the most part, daily candles, H4 candles always have wicks. Most of the time, you're gonna see wicks on these candles. Pretty much went up 6.8 pips, and our take profit one is for 11 pips. Can move stop to entry, secure 50%, and just leave the rest to run if we continue to push. Let's see what will happen. At some point we might get a pullback, but I just don't want it to pull all the way back down here. Even though I exit the trade, I instruct the persons in the premium group to actually close 50% when it pull back here. So they are managing risk. They should be managing risk at this point. So even if it pulls back to stop you out, you would have lose less than you intended to. That's risk management in Forex. Because, losses in the FX market is inevitable. Very much inevitable. You're gonna get losses here and there. But the most important thing is to manage those losses. But I think if we can break above here, we might continue to push. You see this move? I did this analysis last night, and I told them that once price break and close below here, you could have gotten a sell. Once you close below here, you could have gotten a sell. Close, create a top wick. You use a 10 pip stop back in the range, and you would have made 20 pips just like that. But I was sleeping at the time and I got a bit of the retracement. But really and truly, I should have caught the buys from down here. Should have caught the buys from here. I should have caught this down here. As would have actually went up to about 18 pips, which should have been more than okay, but it is what it is. Same thing for this trade idea, potential sells once we break here. Same idea. And this move 37 pips. But for now, I'm just gonna watch GBP JPY to see what is going on. So the entry is at 40. 149, 740. That's where the entry is at. So price might take its time to, push up, but let's see. And remember, it's Friday, so you just have to really take it easy. You just have to take it easy because it's Friday. last day of the week, and this is the day when person tend to lose back all their profit, always on a Friday. So pretty much, yeah, the week is looking good. I think for gold, you definitely need price to break 1759 because the idea is always the same. As I can say, we have been in this range right now. So this is where we are bouncing between. So for sales, we need price to break 1759. And once you can get a candle to break and close below here, it simply means that we are leaving this consolidation zone. So it will increase the probability for the market to actually push price down to the next level. If we break above here, then this is our next destination. 58 pips away. So these two range, are more than big enough to actually take a trade. So what I consider this to be is a no trade zone. All right, so this is a no trade zone. You don't want to take any trade in this area. So you actually need price to leave this area. So once you can close below, you can get a good sales. And if you break above, you can get a good buy. As I stated yesterday on the stream, the idea is always the same. So for person who are actually paying attention, you could have caught these buys right here. You could have caught these buys right here because we have clean candles to the left. We were in high volume session, leading up to pre-London. We break and close above resistance. What do you think will happen? If this is not a fake out, you should get continuation because there's a reason why price leave this zone. This idea was sent in the premium group yesterday as well. Wait for price to break and close above this level. Even though we close all the way up here, I told them to just wait for the retest right here and price stop exactly that area, and they would have been able to capitalize on, a 20 pip move just like that using roughly a level pip stop. So the idea is always the same. The idea is always the same, guys. We break above this. I never like the idea of buys. I just never like the ideas of buys. But even here, you could have taken entry because this would have been 9:30 NYSE open. So as soon as this candle give you the lower, we can start to break the highs here. Man, there's a lot of volume in the market, so we shouldn't have any problem to pushing up. But I just didn't like the information we have here to the left. That's the reason why I didn't like the idea of buy. But then again, as I always say, momentum tends to break any structure. Momentum with volume will tend to break any structure. And as you can see, we are pushing up nicely towards our take profit 1 for GBP JPY. Let's see how much pip is this. It's like 8 pips. I'm going to instruct them to move stop to entry. Move stops to entry at everyone. Alright, so pretty much this trade should be risk free, because the market structure now is a bit messy. I'm gonna be completely honest. I don't like this market structure right now. So you just have to take the extra precaution, you know? Just have to take the extra precaution. I don't like the market structure. This play was based on the fib. Alright. This play was based on the fib. So I sent out the signal here. I got my a second entry. I place a second entry here. When this candle pull all the way back into this area, I place a entry here. You know? So this entry is still running, still in this position as we speak, you know, but this position, the first position I place, I actually closed this at about 6 pip. And I actually closed this at about 6 pip. So should be good. And so far the week is good. So nobody should actually say, hey, I'm not in any profit for the week. So I don't know if you guys can see it. It's not gonna show up. But it's a pretty basically a blue week, I would say. You know, it's basically a blue week. It's not showing. Take the light, but I'm gonna post it in the group as well. But it's pretty much, you know, a nice week. Like overall, we were able to capitalize on probably about well over 200 pips. You know. So we are pushing up to take profit one. So let's see. And I think we're gonna get it. I think we're gonna get TP1. I think we're gonna get it. We should be able to. 850. So I just have to be patient. We're at resistance. And these buys, I caught these buys last night as well, and I caught these buys right here. Like, yeah. Custom. And I think if persons are looking for sells, I think if we break and close below here, we shouldn't have any problem getting this 19 pip move. Once we break and close below here, so if you are looking for sells, you would need a break below this area, you know, to get this potential wick fill. I think if it pulls back to entry, then whoever is in the trade should get stopped out at entry, so they wouldn't be losing any money. They shouldn't be losing any money basically. I was looking at this as a potential break and retest, but this candle close back in the range. So, yeah. And the easiest way to analyze the market, guys, you see, when you come to the chart, you want to identify a range that has clean candles, like movement like these that are 20 pips or more. Once it is 20 pips or more, I can get price to break above here and close above here in a high volume time, you know, it will increase the probability for the market to push price up. Because when price is in consolidation, there's always a reason why we break out of that zone. There's always a reason why we break out of that zone. Cut down the volume, fixed range, no, this. So this is where price has ranged the most. This area is where price has been the most. Yeah. So I think if we can stay above here, we might push up back. Alright, as I can see, pretty much GJ is all in price. DJ is holding price at this moment. As we speak, we are holding price. So once it don't push back here, then we should be okay. I'm just a bit concerned looking at it on the H4 time frame. I'm just a bit concerned. We don't have a lower wick as yet. We have a pinch of a wick, but I don't really consider this to be a lower wick. But the good thing is that we broke the high. And whenever a candle breaks the high of the previous candle, it increases the probability for it to continue to push up. So this is what I'm looking at. But the trade is risk-free, so everyone should be okay. Everyone should be okay. So just gonna see how it goes still. I would love if we could hit take profit one, I would love if we could hit take profit one. That would be good. That's still. GBP, JPY, Great British Pound and the yen. The pair is right here and here. And whenever you see this rectangle box highlighted in blue, that's the pair we are on. Scary. So seeing that we respect this H4 support and the close above, what does this mean? H4 support or strong support. So there's a probability. So even if we're gonna pull deeper, we should finish the day above this level. Looking at it on the daily time frame, we try to test the support here. We fail to push all the way down there. And as you can see, we reject the here just like this candle. So even though this candle is bearish at the moment, it still doesn't mean that it is a change of trend, because we have 1, 2, 3, 4 bullish candle. One bearish candle don't mean that, hey, we are going to push all the way down. But let's see. Come on, take profit one. Let's go. See if we can hit TP1. Now we have 29 seconds, thereabout, 29, 25 seconds. Closing above this minor resistance here. Still have this resistance to worry about. I think we're gonna hit take profit one. We should hit take profit one. We should hit TP1. And for person who are interested in joining the premium, I'm gonna do a $5 off for this weekend. So it will be $25 for 24 hours. So far we have probably about 16 members. Gonna do a session tomorrow. Yes, so you're seeing that we close above here, even though we are still at this, we close at this resistance. I just need price to respect the low right here and to just continue the move up. And you always have to understand that in the FX market, whenever you see a candle opens, there's a 90% chance it will create a lower we can attack with. So seeing that we are pulling back in the first 5 to 10 minutes, that is okay. That is pretty normal. We just don't need it to pull all the way back here to stop us out. So once you can respect the low, then we are okay. It doesn't matter if price want to play around in this area. We just need it to respect the low of the previous candle right here to continue its move up. So this is what I am looking for. stone a bit cleaner. So this is gold, and this is probably over 100 pips. No, 80 pips. Yeah. So this is a big range, but gold you can get 50 pip just like that. So we need price to leave this area. We definitely need price to leave here. So for a person who trades gold, leading up to the New York Open, you can just monitor 1760 and 1768 for price to break at either handle. But you definitely need a close below. You know? You definitely need a close below. And once you get that, then you are in for the money. Alright. So we should tap it now. We should tap it now. Should tap it. Let's go. That's like 1 pip away, It's like 1 pip away. So let's see if we are going to tap TP1. Let's see. Are we going to hit it? Come on and don't play around. Let's go. TP1 it. TP1 it. TP1 it. All right, so let's see if we can actually push up the take profit to one 150 flat. So our take profit 2 is at 150 flat. Yeah, no, I'm not gonna be greedy. I'm gonna close this position. Easy, 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 easy. Tell your guys, like, persons that are in the group, everybody will take them trade here this week. Them supposed to make back them subscription fee. Everyone that actually took these trades, they're supposed to, should have made back their subscription fee. Um, close. Friday. Just a moment. Checking something on the calendar. April, Saturday. Just as I can see, we are pushing up nicely. Nice. So pretty much it should be up probably about over 15 pips. 16 pips. This is a pretty good move. This is a beautiful move. Let me just send this card. So let's see if we can push all the way up here. I exited the next position, so shouldn't have any problem. Um, if persons are still holding, we shouldn't have any problem to continue up to here once you can break and close above here. But if price starts to reject here and form resistance like on the 15-minute time frame, then at that point you want to, consider closing your position. But I think this is a pretty decent move. So we're looking good. Alright, so this is it, guys. So this is just for today only. So if you look right here, you can look at the date 16, 16, 16, 16, 16. Just like that. And if you look at the week, this is what we are running for the week. So the only loss we have this week is this 319. This is the only loss. 319, the only loss. All right. For this one, I was actually setting my stop loss on this trade, and I don't know what happened, and I accidentally closed the trade. And I just opened back the position immediately right here. So so if person join the group, trust me, over a period of time, you're gonna be good. They can see your all the trade overnight, commission and swap and stuff like that. So we shouldn't have any problem whatsoever, you know. But we are looking good. We are looking good. I think for better buys, take for example if you close above here, it's gonna be a bit risky. Close above here, it's gonna be a bit risky. But I just not liking the current market structure. I'm not liking the current market structure, in all honesty, because you see the only play you could actually get with these are probably with the trend line and the Fibonacci. That's those are the only types of play. Price create a low, then create a high, allow it to retrace about 50 to 60%. And if price reject the zone or farm support, you buy it up. That's the only play I was actually looking at when I came to the chart this morning. And it played out well, but market structure is just messy. Market structure is just messy. I just have to sit down and be patient. So this weekend, after I finish the marathon, I might take a hour to do a fire simulation session with the premium guys. Just run through everything again, show them the strategy, the effectiveness, how to manage risk and stuff like that. So it's gonna be pretty good, guys. It's gonna be good. It's gonna be good. So after I finish the stream, I'm just gonna finish touching up on certain things, you know, and then we'll just run it off tomorrow. Just see how it goes still. Oh, trading tell us, yes, they say once you're disciplined, you ain't gonna have any problem. Once you're disciplined with trading, a person come in and they try to rush it. It's a process. It's an educational process. You just have it after a while reading the chart, it's gonna be 1 tree. Just like that. Reading the charts, it's gonna be 1 tree. But person need to be disciplined. You just need to be disciplined and just go through the process. Let's see, change the settings for this. Device, meeting, options. I've got the bigger time frame. Still not really saying this zone, this area, man. This is a mess. You see, move like these. Trust me, very nice move. These moves, nice, but them here, trust me, them here is a mess. You even wanna look at that. Let's see how it goes still. I think GBP USD should be pushing up. Yeah. So close above here. We might continue up to this level to close above here. But if you're looking for sells, you need price to close below here, and then this would be your target. And another thing with the market, you're not gonna get a big push whenever price gives you like 20-30 pips. At some point the market will pull back, different from when you get plays like these. Let's see, different from when you get plays like these. These are different. But most time the market gonna give you a swing low, a swing high, a swing low, a swing high. That's how the market move. You have what we call a range when candles are just side by side, and then you have a uptrend where this is a uptrend. Let me show you guys. This is a short-term uptrend. So with this now, we are actually creating what we call higher highs and higher lows. All right. This is a higher high because you know we're higher than here, and also here. This is a higher low because it would have been higher than the previous significant swing low. Again, you would have some form of higher high in this area. Let me mark this. So this would be a low. All right. You can consider here to be a high. Consider this to be a higher low because this low is higher than the previous. You can consider this to be, let's use here. You can consider this to be a higher high because this high is higher than this high and even this one here. Again, you have a higher low because this is where price is bouncing from with the trend line. So one touch, two touch all the way out. And and we are higher than here. And we have another higher high in this area. Again, higher low area. This is your swing low. Higher low because this low is higher than here. You have your higher high. All right. Look at this now. What happened when price breaks structure? Price break the trend it is trading in, What happened when price break it? Retest. If you're using the break and retest of the trend line, you sell here. Stop would have been about 20 pips. You would have ride this entire move down. So sometimes you're gonna get plays like these, but when price is in a range, you're gonna get stopped out most of the time when you get like 20, 30 pips. So person need to really, look to take profit at 10 to 15 or 20 pips. For me, if I'm not gonna take profit at 10 pips, I at least move my stop to entry so that the trade becomes risk-free. So even if it pulls back and stop me out, I won't be losing anything. Alright. And this is a short-term downtrend just the same. And let's mark off these swing lows and swing highs. So this considered to be a lower high. You get lower highs in downtrend because it is lower than the previous here. And then you have lower low here. Because this low is lower than this one right here. Alright. Again, you have lower high in this area again. You still have lower lows. You have lower, well, this low is a bit higher than this. No, this is lower than, yeah. This low is lower than this one. So this is a lower low basically. Then again, you have another lower high because this swing high is lower than this. And then, this one is considered to be a higher low because it is higher than this low. Why? What happened next? Price break structure, bam. And a pull, and a push down to actually try and retest the trend line. Price rejected, shoot all the way up. So that's the whole idea after the market trend. So you have uptrend, downtrend. I have what we call a range in the market. And another name for range is consolidation. So whenever you hear we talk about consolidation or the market is in a consolidation phase or consolidating, the market is actually in a range. And as you can see, we are breaking above. GJ should be moving. Let's go. See if we can hit TP2. And why I like this pair? Because now the yen is closed. So this pair is influenced by the pound and the pound only. Whenever the NY session is fully active, the US dollar tend to move other pairs just the same. But, looking at these two pairs individually, you know that the yen is closed and the pound is open. So that brings about what we call volatility in the Forex market. So once there is volume, you're going to get price moving up and down, up and down. You just have to do your analysis, identify where you can enter the trade, get in, get your pips, get out of the market and call it a day. But for me now, I'm pretty much done for the week, So Just call it a week. But you know, this was a pretty decent play. Was using like a 17 pip stop just to be safe, you know. And as you can see, we hit more than 1-to-1 risk to reward ratio. This is 19 pips. Now it take profit 1, take profit 2 at 150 flat. Still holding this position, I would have been up 27 pips. But you know, you see the thing is sometimes persons, you know, they get in a trade and they exit the trade, what they call exiting the trade too early, and then you know they tend to beat up themselves about it. I don't do that anymore, you know, because I know that there will always be plays in the forex market. You're always gonna get plays in the forex market, you know. So I don't even worry about that anymore. You know, if I miss a play, I said, okay, well tomorrow I'm gonna see how I could have caught a play like that, you know. So forex is really what I would say basically a repetitiveness of things that you would have seen over and over and over. The same thing keep on repeating itself, you know. So that's what you know, you understand the market structure. You know what you're looking for in the market because you would have seen this play multiple times. You know, you do your analysis just to get confirmation that hey, what I analyze do in fact make sense. You know, so before you even enter the trade, where I'm gonna place my stop loss, that's what I should be asking yourself. Yeah, asking yourself. You know, you identify where you're gonna put your stop. You know, where you're gonna enter the trade, and then once you enter the trade, don't even think about the profit. Don't even think about the profit you are going to make. Think about how you are going to manage risk if this trade start to go bad. You know? So take for example, if I'd enter a buy here. Alright, I enter a buy here and this kind of came down and create a lower wick right here. I'm just gonna mark this off in explaining risk management. Alright, and we push all the way up here. You see if this candle pulls back to my entry, I would just close 50%. Alright, because it would have been up, you know, 9.9 pip, basically 99% that. Alright, and why are you going to pull back to my entry and then go back in negative? So at this point, I would have closed 50%. If it starts to break the low, knock off another 50%, manage risk. Because at the end of the day, you would have probably lost about, if you're risking $100, probably about $25 to $30. Because you would have closed 50% of your position, which should have reduced it to $50, and then it would have pulled back to negative $25, and you close half of that, leaving, you know, negative $12 running. And then if that negative $12 push down, it should total up to about 25. So you're risking $100, you know, and in managing risk, if price should stop you out based on what I just explained, you would have lost about $25. That is called risk management in forex. Because as I always say, you're gonna have certain plays in the market. Once you get into those trades, you're not gonna get any drawdown. The market just gonna shoot. You know? So you just have to manage risk. You just have to manage risk and don't stress yourself about losing $1 or $2. You know? How person actually mess up their account, they over risk. And what I mean by this, with a normal forex trader, you are required to risk 1 to 2% of your account. So if you have $100, in hindsight, you should be risking about $2, $3 max. You know, over risk is when you want to risk $10, $15, $20. If you're risking $10 per trade, it simply means that if you have 10 bad trades, you're going to blow your account. You know, as it relates to 1%, are you going to lose 100 trade back to back? Very highly unlikely. Because what I do, I come to the chart at a specific time, look for the setup, wait on the market to form price the way I want it to, and then I go ahead and execute my trade based on that. And I just manage risk. I just manage risk. So far this week we had like two minor loss. Two minor loss. Which total up to about 27 pips. But the gains as it relates to pip probably about 6 times, 7 times that. So what I'm gonna actually do, I'm gonna recap. I'll probably just do a recap of the trade that I actually called this week that are profitable and lost just the same, you know, and just post it for the premium members. Yeah. No, we not gonna like buys above the level here, because price came up a lot of time and we rejected the area. So I wouldn't be interested in any buys above this level. You know, I think you might get moving in NY session, but I think we might see some better market structure next week, seeing that we pretty much range this entire week. Because this entire area is a range. So we pretty much range the entire week. So. No, you could have took the buys right here on the 15-minute time frame. Zoom in and looking a bit closer, we actually close above the level, so just wait on the lower wick and when it flips. The thing with the 15-minute week confirmation. But this makes sense because, GJ is going up. GU should push up because USD is close and the yen is close, so both these pairs are influenced by the pound only. Alright, so when I hear they talk about confluence, this is what they're actually speaking of, like, one peer basically influencing in the movement of another. Alright, so GBP JPY going up, you're gonna find that GBP USD is going up as well because both the yeah, this is the base currency. What's the one name again? I remember the name not click right now, but these two currencies are close. So you're gonna find that when both the second currencies are close, once this one is pushing in a specific direction, you're gonna find that the next one will actually follow that type of movement. The yen is close, the USD is close. So if GBP is going up, GBP USD gonna tag along just the same. Should continue to move up. TP2 coordinates. 0, 0, 0. Oh, that just gone. One 50. And we are 145. So I take profit too. Why I start to do this a bit earlier? Um, it's because I want to capitalize and move for the purpose of signals. That's the reason why I tend to get up, a bit earlier. Cause this like 4, 5 o'clock, 3, 4, 5 o'clock, you're gonna find good moves in the market. This is 23 pips. So this is a pretty decent move. Wow, there. Again, so for the Signal group members, I'm gonna just put one a 9 tone for the notification for this card. So when you hear it, you know it's time to go. You just get up, look at where I send the entry, look at the current price, I hit your buy or sell button, I put in your stop loss, and I'll notify you guys as it relates to risk management as we will make progress in the trade. But so far, as you guys can see, um, two trade. Well, I actually entered this trade before I opened the live, but the signal was sent out. So even when I sent out the signal, we had a huge retracement. So if person had even took buys down here, because I got a position here, so if person had took it here, trust me, you would have gotten like probably like a 4 pip drawdown, and your stop loss would have been at 8 pips. So that is pretty okay. And bam, we shoot all the way up. But this is a day trade idea. So if we continue to move up, we can get a 40 pip move. But if not, you know, we would have pushed at least 50% of everything that, we're anticipating, the overall move we're anticipating. Honestly, we might hit TP2, might hit TP2. Trust me, we might hit it, we might get it. Might hit, but we are pushing up to this resistance. Let's see what we have on the H4. So we have a 4 hour resistance here. Now might encounter some problem, but I think that we should hit TP2. So we're actually 2 pips away from take profit too. Alright, so basically 1 pips away. Are we going to get it? Secure or do nothing. danger. Sometimes you see what I would have experienced. Sometimes price come, so close, they take profit and it just reverts. Bam. This is less than a pip. This is point 0.6 of a pip. And look at that. Look at that rejection. Still not hit it as yet. Came so close. Guys, 20 pip this morning, 20 pip yesterday morning. Call a trade, we'll call a trade from Monday. Which day it was Monday? Well, think I call the buys from here. Buys are called here. Well, 950, probably about 950. This entire move was for 80 pips. So I'm just gonna do a recap to calculate the total pips we would have made as it relates to gains in the FX market. Looking at volatility, a person who I sent out an idea yesterday. Send out an idea yesterday. I think the entry was here. I think it was somewhere about here. And stop loss. I think we're about below this level right here. Right here. Was a bit more because it actually came close to stop loss, but I just knew that we were going to push back up. Let's look at it on the 1 hour time frame. Yes, I think entry was somewhere here. Let's I think entry was based on this, the close of this candle, I think, and the stop was probably about here. Because I always try to put it, below the wick. So if person had took this buy and hold it, trust me, would have made some serious profit. I made some serious profit. Trust me. But I think looking at it now, if this makes sense to anybody, are we going to respect this trend line and push down? Looking at it on the 1 hour time frame, the concept still applies once candle break and close below support. It's the same concept. So this could just be a top wick, and if we break the low here, we might continue to push down. If we respect the trend line, even makes it better. But if price breaks and close above the trend line, then at that point you want to manage risk. So I think if we create a top wick and break the low here, we might actually push down for a bit. This is what I always try to explain to person. Yes, so once you understand this and you apply it with your trading, you're not going to have any problem. You see, as a candle close below support, don't just take a sell. Wait for the candle to create a top wick and break the low. Wait for the low to get broken, then you sell. Alright, so TP to it. And also actually break through. We're at this rejection zone. So even if a farm resistance, I would advise nobody to try and take the cells because we could actually pull back, yes, but seeing that we break above this minor resistance here, might just pull back to retest the area to continue to move up. But I think for a person who actually caught this buy, you should have secured at least 80% of your position. And look at gold. Guys, as I tell you, like you can't go wrong with this. I tell you this every single day. Wait for price to break above here as discussed before. And just like that, you know, could have used like a 20 pip stop. You would have went up 39 pips. Just like that. Like, there is no better way to explain the breakout of structure. There's no better way to like goal. I mostly play goal on the 15 minute and on the 5 minute time frame. That's what I mainly play goal on. So even though this resistance is on the 30 minute, I am looking for entry on the 15 minute. So I'm not even worried about this resistance here. Because I would have had a 15 minute candle close above a 30 minute resistance. So even though the 15 minute is weak confirmation, you don't want to, really trade gold on the 30 minute time frame because you're gonna have a big stop loss. So I think stop below this candle would have been okay. And as this candle, create a lower we can break above, you take your buy and ride the trend up. That's all you need to do. It's just like that. So I looked at gold, this was discussed. So for a person who were actually paying attention who trade gold, you could have capitalized on that move on the 15 minute time frame. Yeah, what I was looking at with this again. Yeah, that pull up. And it was the same concept for this as well, but I just didn't send it. So for person in the premium group, you see whenever I do a markup, again, this is your range. So you don't trade in this. You wait for a candle to close below the area like this. If it closed too far, take for example, this would have been about 8 pip. What you can do is for wait for this candle to pull back as close as possible to the support that price break. And then if you got a entry here, you could have used like a 14, anywhere 12 between 14 pips stop, and you would have gained 21 pips just like that. So you would have risking like if you're risking $1 per pip, you would have been risking $14, you would have made $22 right there. So I'm gonna explain lot size as well. I'm gonna do an in-depth explanation of lot size and how you go about linking money to lot size so you can know how much you are risking, you know, and the different lot size and how much you can actually gain or potentially lose based on the lot size as it relates to monetary value. As I can say, this is the destination. So guys, you really can't go wrong. Like trading is not hard. You come to the chart, just identify your range. Identify where price is consolidating. Alright? And then you look to see if price break out of this range. Where can we push to? You just go over to the left side and identify the next resistance. It is right here. Right here. So price break here. We have two nice candle here. This is our destination. Now might reject, seeing that we have a support here, we might reject, yes, but this is your overall destination. So at this point, it would have been more than safe to put your stop to entry and just leave a small position to run. And looking at it right now as it is, the only other option would be for price. Let me use change this color. The only other option would be to wait for price to actually create a high, pull back, form some support respecting this level, and then you can actually look to take a buy for price to continue up to retest the high. This is known as the break, retest, with a buy. So when I hear you talk about break and retest, price actually break out of the structure. So this is the break move. The retest move would be when price pulls back to the area that got broken. With support, you take a buy, retest the high. Again, alright? So that is the break and retest. Break, retest. Break the here, you pull back to retest it again. You push up to test the higher create. If you get momentum, you break through. Again, you still have to look to your left to see your next potential target, where you actually might go. And then you see that we have another pretty okay move with resistance here. So if we break through that level, then this would be our next destination. Mhm. So let's see. All right, so I'm gonna sign off now. So for person who are, you know, you can head over to this stream, and you can go ahead and actually watch. It's gonna be live like within another 5 minutes. So Wix don't lie. You know, he's my mentor, so you can head over to his stream and watch the NY session. So I'm gonna actually sign off now.